Hi everyone, welcome to Eco Learning classes. This is Professor Geeta Mahesh. Dear students, let us discuss an interesting and important concept, that is match the following. As we know, all students like to answer this question. Now let us start. Market economy, we know in the market economy all economic decisions are taken by private entrepreneurs. Service of a teacher, it is a skill. Centrally planned economy, where economic decisions are taken by government. Positive economics deals with the functioning of mechanism. Normative economics evaluate the mechanism. Here you can see demand curve. We know it slopes downwards, so downward sloping. Linear demand equation, D equals A minus BP. Linear equation, A minus BP is the right answer. Unitary elasticity of demand, we know it is equal to 1. Elasticity of demand is equal to 1. Complementary goods, where we use both together to satisfy a particular want. Pen and ink, we call it as an example for complementary goods. And we know indifference map is a family of indifference curve, where you can see set of indifference curves. Now let us take up one more match the following. The first one is CRS. The expansion for CRS is constant returns to scale. SAC, expansion, short run average cost. LRAC, long run average cost. TFC plus TVC, it is equal to total cost, TC. Then SMC equals delta TC divided by delta Q. Yeah, one more question on match the following. MR equals delta TR divided by delta Q. Pi is denoted for profit. So profit equals TR minus TC. AR equals average revenue. Average revenue is nothing but a TR divided by Q. Normal profit, for zero profit condition, we call it as normal profit. Perfect computation, perfect information. Now let us discuss one more question and match the following. Adam Smith, as we know, price mechanism is known as operation of invisible hand by Adam Smith. Price ceiling, it is a upper limit imposed by government on particular goods, especially agricultural goods. Market equilibrium, where quantity demand is equal to quantity supply. Possibility of supernormal profit. When there is a supernormal profit under perfect competition, it attracts new firms into the market. Price floor, it is a lower limit on prices imposed by government for few essential goods. Now let us discuss this one. Labor, for labor we know reward will be wages. GDP, expansion, gross domestic product. Inventory, it is a stock variable. PDI, personal disposable income. Domestic service, it is non-monetary exchange as it is not included in GDP. This is the expansion for SLR. It is a statutory liquidity ratio. Circulation of coins by Government of India. Money, it is a main function of money is medium of exchange. M3, M4 is good example for broad money. Repurchase agreement we call repo. Savings, that part of income which is not spent. It's mean that Y minus C. Raw material, intermediate goods, consumption per unit of income, average propensity to consume, aggregate demand for final goods, it is denoted by C bar plus I bar plus CY. Excess demand, when demand is more, we know it leads to rise in the price in the long run. SDR, special drawing rights, we call it as paper gold. Balance of payment, it deals with trade in goods and services. Balance of trade deals with goods alone. Floating exchange rate, it is also known as flexible exchange rate. Managed floating is known as dirty floating exchange rate.
Dear students, today we are going to discuss important and interesting concept, assignment and project oriented questions which are important for 10 marks in PU board exams. Out of 3 you need to answer 2 questions. Each question carries 5 marks. Now let us discuss from consumer behavior. Let us try to understand question first. A consumer wants to consume 2 goods. The price of banana is rupees 5 and price of mangoes is rupees 10. The consumer's income is 40. So, consumer's income is given, that is 40 rupees, and the price of banana is 5 and price of mango is rupees 10. Now, let us see what are the question. How much bananas can he consume if he spent his entire income on that good? Entire income means a consumer is going to spend 40 rupees only to buy bananas. Second one, how much mangoes can he consume if he spent his entire income on that good? That means again 40 rupees. If he is going to consumer want to consume only mangoes and he is going to spend the entire income 40 rupees to buy mangoes. So, how many mangoes he can buy? Is the slope of budget line downwards or upwards? Are the bundles on the budget line equal to consumer's income or not? If you want to have more of bananas, you have to give up mangoes. Is it true? Now let us discuss answer for the question. How much bananas can he consume if he spent his entire income on that good? So, income of the consumer is 40 and the price of banana is 5. So, 40 divided by 5 is equal to 8. So, 8 bananas he can consume if he is going to spend his entire income. He can consume 8 bananas. What is the income of the consumer? 40. And what is the price of banana? 5. So, 40 divided by 5 equals to 8. So, if he spent his entire income on that good, that means on banana, he can buy 8 bananas. Similar way, we can calculate even number of mangoes he can consume if he is going to spend entire income. What is the income of the consumer? 40 rupees. The price of mango is 10. So, 40 divided by 10 equals to 4. So, he can consume 4 mangoes. So, here you can see the calculation 40 divided by 10 equals to 4 if he spent his entire income on that good. Is the slope of budget line downwards or upwards? Of course, the slope of budget line always flows from left to right downwards. So, the slope of the budget line downwards. You can see here the slope of budget line is downwards. Here you can see on x-axis banana is measured, on y-axis mangoes are measured. You can see the budget line which is flowing from left to right downwards. Next one, are the bundles on the budget line are equal to consumer's income or not? Yes, the bundles on the budget line is equal to consumers' income. What is the meaning of budget line? Budget line shows all those combination of two goods whose cost is exactly equal to consumers' income. You can see here the equation also shows P1 x1 plus P2 x2 is equal to M. So here, yes, the bundles on the budget line is always equal to consumers' income. If you want to have more of bananas, you have to give up mangoes. Is it true? Yes, it is true. We have to give up more bananas to have mangoes, or to have more bananas you have to give up mangoes. You can see here a consumer is in the point A, let us assume, and now bananas and mangoes he will be consuming. B 1 unit of banana and M unit of mango. If you want to have more of banana, say B combination, you want to have B2 of banana, then he has to reduce the mangoes from M1 to M2. So, there is a decrease in number of mangoes in order to have more of bananas. Now, let us discuss the practical oriented question from third chapter. Find the missing product in the following table. So, we need to find out the missing product from the following table. Before we calculate, we need to find out the formula, or we should write down the formulas. What is the formula for total product? Total product is equal to summation of marginal product. How will you find out a marginal product? Marginal product N equals total product N minus total product N minus 1. How will you find out AP? AP equals TP divided by factor or labor, you can consider. Now, let us calculate. Here we need to find out a total product missing values. So, here it is a zigzag addition, we know, because total product is a summation of marginal product. So, 0, 0, 0 plus we do not know, let us assume or keep it as it is. Now, for 24, if we add 16, you will get a 40, 40 plus 10, you will get a 50, 50 plus 6, you will get a 56. Now, 56 plus 1, you will get a 57. So, this we call it as zigzag addition. To find out a marginal total product, you need to add marginal product. Now, we need to find out a marginal product. See here, we need to find out a marginal product of a first factor. Let us consider marginal product of 1 is equal to total product of 1 minus total product of 1 minus 1 means you can consider that as a 0. So, here you can write down 0. What is the total product of first unit? That is 10. What is the total product of 0? That is 0. So, this is equal to 10. And if you want to find out a marginal product of a second unit, then you can write down MP2 equals TP2 minus TP1. So, what is TP2? Total product for a second labor or second factor is 24 minus first factor. Total product of first factor is 10. So, this is equals to 14. So, you can write here 10, then you can write here the second one 14. How will you find out the average product? So, we know average product is equal to total product divided by labor. So, what is the total product for this? So, that is 50. 50 divided by 4. So, write down 50 divided by 4 is equal to 12.5. So, write down here 12.5. This is how you need to find out a missing product. It is important for 5 marks. Dear students, let us discuss one more assignment and project oriented question. Compute total revenue, marginal revenue, average revenue schedules in the following table when market price of each unit of good is 10 rupees. So, here the price of product is given and the price of product is 10 rupees. So, I will take price as a P here and the price given is 10. I will make a note of that one. So, then how will you calculate total revenue? And we know the formula for total revenue. Total revenue is price into quantity. How much quantity you are selling into the price of the product. If you multiply, you will get a total revenue. Here you can consider multiplication of this. 10 into 0, you will get a 0. 10 into 1, 10. 10 into 2, 20. 10 into 3, 30. 10 into 4, 40. 10 into 5, 50. Then 10 into 6, you will get a 60. Then how will you find out a marginal revenue? Marginal revenue N equals total revenue N minus total revenue N minus 1. So, here what is total revenue N? Let me consider now we need to find out a marginal revenue for 0. So, we have to take a total revenue for 0 minus total revenue 0 minus 0 minus 1, 0 minus 1. But the previous value as we do not have and we have total revenue 0 is 0. You can consider that as a 0 or you can leave that as a hyphen. Then marginal revenue 1 is equal to total revenue 1 minus total revenue 0. Previous total revenue you need to consider. This is equals 10 minus 0 is equal to 10. Similar way you can calculate total revenue for second one. Total revenue of second unit minus total revenue of first unit. Total revenue of second unit is 20 minus 10 is equal to 10. So, like this 10 minus 0, 10 minus 0 you will get a 10, 20 minus 10 you will get a 10. Again 30 minus 20, 10, 40 minus 30, 10, 50 minus 40, 10, 60 minus 50 will get a 10. Then how will you find out average revenue? Average revenue is equal to total revenue divided by quantity. So, total revenue you can consider 0. Total revenue is 0 for the first quantity sold is 0. So, 0 divided by 0 you will get a 0. Then first unit you can consider to average revenue of first unit equals to total revenue of first unit divided by quantity, which is equal to total revenue is 10, 10 divided by 1 equals 10. So, like this you can calculate here. You can divide 10 divided by 1, you will get a 10. 20 divided by 2, you will get a 10. 30 divided by 3, you will get a again 10. So, a similar way you can calculate all the values. 60 divided by 6, you will get a 10. So, in this way we need to calculate total revenue, marginal revenue and average revenue. Dear students, easily you can get a 5 on 5. Budget model on family income and expenditure. Dear student, this is also important for 5 marks. So, you have to prepare a budget, model of a budget for a family income. One side you write down the income of a family, another side expenditure. So, in this table you can see I have entered agriculture, animal husbandry, salary, rent and interest. and here I have entered the sum amount. Okay, from agriculture I will get 10,000 rupees, and from animal husbandry 5,000 rupees, and salary 8,000, and rent that is 10,000, and interest 7,000. If I add up all these things, my total family income will reach us up to 40,000. As I get an income, there will be an expenditure too. So for food I will spend every month, I will spend 12,000 rupees, for education purpose 10,000, and for health 6, and transportation I will spend 6,000 rupees, and for other or miscellaneous expenditure comes around 3,000. When I add up all my expenditure, the total expenditure in that particular month is 37,000 rupees. So if I take a difference of 40,000 minus 37,000, so I can able to make a savings, that is 3,000. So my family budget will be a surplus budget. Dear students, the last one is name the currencies of any 5 countries of the following. Here they have given country names. You have to choose 5 countries and you should name the 5 country currency names, or you have to list out the names of currencies of different countries. So currency of USA is dollar, UK pound sterling, Germany European euro, Japan yen, and China renminbi, Argentina peso, UAE dirham, Bangladesh taka, Russia ruble, India rupees.
Dear students, let us discuss 1 mark questions which are important for final exam. Answer the following questions in a sentence or a word. So each question carries 1 mark. Why does problem of choice arises? The problem of choice arises due to limited resources and unlimited wants. Give the meaning of microeconomics. Microeconomics studies actions of individuals and small groups of individuals. What is budget line? It is a graphical representation of all possible bundles of two goods which cost exactly equal to income of a consumer. So it slopes from left to right downwards. Expand MRS, marginal rate of substitution. To which side does supply curve shift due to technological progress? Supply curve shifts towards right due to technological progress. So supply curve shift towards right. Next one, what is price ceiling? The government imposed upper limit on the prices of goods or services is called price ceiling. Upper limit on the prices of goods and services is called price ceiling. What is price floor? Price floor. The government imposed a lower limit on the prices that may be charged for a particular goods or services is called price floor. So it is a lower limit on the prices of essential goods. Through which legislation government ensures that wage rate of laborers does not fall below the particular level? Minimum wage legislation or Minimum Wages Act. What is monopoly? It is a market with one seller or a firm with many buyers. Write the formula for quantity demanded. QD equals 20 minus P. What is duopoly? It is a special case of oligopoly where there are exactly two sellers or firms. Who are economic agents? Who are economic agents? Economic agents are those individuals or institutions which take economic decisions. They can be consumers, producers, or government. Name the well-known book or well-known work of Adam Smith. An inquiry into the nature and causes of wealth of nation, popularly known as Wealth of Nations. What do you mean by wage rate? Price paid for purchase of labor service is called wage rate. Expand CPI. Consumers Price Index is an expansion for CPI. Give the meaning of GDP. GDP, gross domestic product, is a market value of all final goods and services produced within a domestic territory of a country measured in a year. What is depreciation? It is a deduction made from the value of gross investment in order to accommodate regular wear and tear of capital goods. What do you mean by barter system? What do you mean by barter system? Economic exchanges without mediation of money is called barter system, or exchanging commodity with commodity, we call it as barter system. Give the meaning of money. Money is commonly accepted as a medium of exchange. What is fiat money? Fiat money is a money whose intrinsic value is very less than face value. Example, coin, currency, notes. Expand CRR, cash reserve ratio. Write the formula for MPC. Delta C divided by delta Y is also marginal propensity to consume is denoted by small c. Who are free riders? Non-paying users of public goods are called or known as free riders. What are revenue receipts? Revenue receipts are those receipts that do not lead to claim on government. They consist of tax and non-tax revenues. Expand FRBMA, Fiscal Responsibility and Budget Management Act. What is primary deficit? Primary deficit is a fiscal deficit minus interest payments. What do you mean by open economy? An open economy is one which interacts with the rest of the world through various channels. What is balance of payments? Balance of payments is a record of transactions in goods, services, and assets between residents of a country with the rest of the world for a specified period of time. Now let us discuss 2-mark questions. Answer the following in 4 sentences. Each question carries 2 marks. Mention the central problems of an economy. Central problems of an economy as follows: what to produce, how to produce, and for whom to produce. What do you mean by inferior goods? Give an example. Inferior goods are those goods which demand decreases with increase in income of a consumer and vice versa. Example, low quality goods like ragi, bajra, sajje, etc. State the law of demand. Law of demand states that other things remaining constant are ceteris paribus. A fall in price leads to expansion in demand and rise in price leads to contraction of demand. Mention two different approaches which explains consumer behavior. Cardinal utility analysis, ordinal utility analysis. Mention the types of returns to scale. Increasing returns to scale, constant returns to scale, decreasing returns to scale. Name the short-run cost. Total fixed cost, total variable cost, total cost, average fixed cost, average variable. What are long run cost? Long run total cost, long run average cost, long run marginal cost. Mention the two determinants of firm's supply curve. Technological progress, input prices. Distinguish between excess demand and excess supply. Excess demand. It is a situation where market demand exceeds market supply. Market demand exceeds market supply. Here the price of the product increases when demand is greater compared to supply, prices will increase. So quantity demand is greater than quantity supply. Excess supply. It is a situation where market supply exceeds the market demand. Market supply exceeds the market demand. When supply is greater, definitely price of the product decreases. When supply is more than demand. So here quantity supply is greater than quantity demanded. Write the features of monopoly. Single seller or producer, no close substitutes, no free entry, discriminate price or uniform price, monopolist is the price maker. Name and write the meaning of two kinds of trade in external sector. Two kinds of trade in external sector are exports and imports. A country may sell goods to the rest of the world called exports, sell goods to rest of the world called exports. A country may buy goods from other countries called imports. Mention the factors of production, mention their rewards. Land, rent, reward is a rent for land. Labor, for labor, wages. For capital, interest. And for organizer, profit. Mention three methods of measuring GDP. Product or value added method, expenditure method, income method. What do you mean by externalities? Mention its two types. Externalities refers to the benefits or harm a firm or an individual causes to another for which they are not paid or penalized. There are two types of externalities. One is positive externality and second one negative externality. Write the difference between nominal and real GDP. First, let us see nominal GDP. It is the value of GDP at current prevailing prices. So GDP is calculated by taking a current prevailing prices. It is not reliable It does not give real picture of economic development of a country. So it is not a reliable and it does not give real picture of economic development. Real GDP. It is evaluated at constant set of prices by taking base year prices. It is reliable. It gives real picture of economic development of a country. Mention any two functions of money. The two functions of money are medium of exchange and measure of value. State the credit control instruments of RBI. The credit control instruments of RBI are bank rate, open market operation, CRR and SLR. Mention the two motives of demand for money. Transaction motive, speculative motive. Mention three linkages of open economy. Output market linkage, financial market linkage, labor market linkage. Why do people demand foreign exchange? To purchase goods and services from other country, we need foreign exchange, foreign currency. Why you need a American dollar or European euros? Why you want? Because we want to purchase goods and services from other country, means we need a foreign exchange to send gifts abroad, to purchase financial assets abroad. Dear students, now let us discuss most frequently asked questions, 4-mark questions. Answer the following questions in 12 sentences. Each question carries 4 marks. Briefly explain central problems of an economy. Scarcity of resources give rise to problem of choice. So first problem is what to produce and in what quantities. Every economy has to decide which goods are to be produced and in which quantities. Whether to produce food, cloth, housing, or to have more of luxurious goods, whether to have more agricultural goods or to have industrial goods or so on. How to produce. Second one is how to produce. It refers to problem in which decisions regarding which techniques of production should be used. There are two types of techniques of production, labor intensive technique and capital intensive technique. For whom to produce? It regards or it refers to which category of people are going to consume a good, rich or poor. Economy must decide the share of output among different groups of people. Explain law of returns to scale. Law of returns to scale explains a physical relationship between input and output in the long run. So here output Q is a function of x1, x2. The stages of returns to scale. There are 3 stages of returns to scale: increasing returns to scale, constant returns to scale, decreasing returns to scale. Increasing returns to scale. 10% increase in input leads to more than 10% increase in output. That means here alpha plus beta is greater than 1. Next one is constant returns to scale. Here it's mean that 10% increase in input leads to 10% increase in output. According to Cobb-Douglas production function, alpha plus beta should be equal to 1. And if you consider decreasing returns to scale, 10% increase in input leads to less than 10% increase in output. So according to Cobb-Douglas, alpha plus beta should be less than 1. In that stage, we can say there is an operation of decreasing returns to scale.
Diagrammatically, you can see on x-axis input is measured, on y-axis output is measured. As input increases, output also increases greater than increase in input. That stage you can see here increasing returns. And then here you can see constant returns to scale. Then here you can see the decreasing returns to scale. Dear students, now let us discuss how to calculate this problem. Here, the following table gives a TP schedule of a labor. Find the corresponding average product and marginal product schedule. So here they have given total product and number of labors. Now let us calculate average product and marginal product. What is the formula for average product? APL equals TPL divided by L. That means total product divided by this labor. If we use number of labor contributed to the total product, you can find out the average product. Let us write down the given. In the table they have given labor, so we have written the labor. Then total product is given and we have written total product. Now how to find out the average product? Total product divided by labor you should use. Now you can see here calculation of APL. So 0 divided by 0 you will get a 0. 15 divided by 1. This one you should use. 1 is 15. Then 35 divided by 2. 35 divided by 2. And 50 divided by 3. You will get a 16.66. Then 40 divided by 4, you will get a 10. Then 48 divided by 5 means you will get a 9.6. Now let us calculate a marginal product. How will you calculate marginal product? Total product of a labor minus total product of a previous labor contributions. Here MPL can be calculated like this. Here let me remove all these things and you can observe here how to calculate this one. Okay. So here you can see to find out this, the previous one we don't know. So we are going to put it as 0. Then 15 minus this 0, previous value. So 15. See total product of first labor. Let me take it as total product of first labor minus total product of previous labor of first one is 0. So what is the total product? 15. 15 minus previous total product is 0. So 15 minus 0 you will get it a 15. Then 35 minus 15. This 15 we will write down. So 35 minus 15 we will get a 20. Then 50 minus this 35 we will write here. So 30 minus 35 we will get a 15. Then 4 minus 50. This 50 we will write here. So as 50 is greater, we will get a negative sign. So minus 10. Then 48 minus this 40, we should take it. 48 minus 40, we will get a 8. So like this, we need to calculate. Dear students, now let us discuss another question. Explain the features of perfect competition. Perfect competition is a market situation in which there are large number of buyers and sellers engaged in buying and selling of homogeneous product at a uniform price. Let us discuss the features of perfect competition. First one, large number of buyers and sellers. The number of buyers and sellers is very large under a perfectly competitive market. Homogeneous product. The product produced by firms under perfect competition are homogeneous. All the products are similar. Complete knowledge of a market condition. The buyers and sellers have full knowledge of market conditions. Uniform price. Under perfect competition, uniform price provides all over the market. The firms in the perfect competition is a price taker. It is a distinguished characteristic of perfect competition. No transport cost. There is no transport cost under perfect competition. So price is uniform. Free entry and exit. It is easy for firms to enter the market as well as to leave it. This condition is essential for large number of firms to exist. Now let us discuss difference between microeconomics and macroeconomics. Micro, its scope is narrow. For macro, its scope is wider. Microeconomics follows slicing method as it studies individual units. Macroeconomics follows lumping method as it studies in aggregates. In microeconomics, each individual economic agent thinks about his own interest and welfare. In macroeconomics, economic agents think of goals is to get maximum welfare of a country. Microeconomics studies partial equilibrium in the country. Macroeconomic studies general equilibrium in the economy. Microeconomic consists of theories like consumers' behavior, production, rent, wages, interest, etc. Macroeconomic comprises of theories of income, output, employment, consumption function, investment function, inflation, etc. Now let us discuss externalities. It refers to the benefits or harm a firm or an individual causes to another for which they are not paid or penalized. Externalities do not have market in which they are bought and sold. Externalities are of two types. One is positive externality, another one is negative externalities. Example, let us suppose there is an oil refinery which refines crude petroleum and sells it in the market. Now let us discuss what are positive externalities. The benefits a firm or an individual causes to another for which they are not paid. The value added by refinery is included in GDP. Generation of employment, increase in standard of living, increase in export earnings, etc. In such cases, GDP will be underestimates the actual welfare of the economy. The value added by refineries is included in the GDP. The remaining, because of establishing oil refinery, so many other people will have an opportunity to get an employment opportunity and increase their standard of living, and they are going to contribute a lot to export earnings. So when it is not included in the GDP, then GDP will be underestimating the actual welfare of the economy. Negative externalities. The harm a firm or an individual causes to another for which they are not penalized. But in carrying out the production by the oil refinery, it may pollute the nearby rivers. It causes harm to people who uses water of the river, hence their well-being will fall. It kills fishes or other organisms of rivers on which fishes survives. Now, fishermen of a river may lose their livelihood, which is not included in the GDP. That means all this negative effect should be deducted from the GDP, but it is not happened. So, in that cases, what happens? GDP will overestimate the actual welfare of the people. Next one is write the table to show impact of simultaneous shift on equilibrium.
simultaneous shift of demand and supply on equilibrium. So if both the demand and supply shifts, what happens on equilibrium quantity and price? So here you can, to remember this, the column heads, we can remember like this: D, S, Q, P. Okay, so D stands for shift in demand, then shift in supply, then quantity, then price. So you have to write down like this only. Then you have to write both the demand and supply shift left side, then both right side. So first left, right. Then you have to take a left, right, then right, left. So you have to arrange it like this. Both may shift left side, both may shift right side. One may shift left, the other one right. Then the right, then left. You have to keep in this format. Then what will be the effect if both the demand and supply shift left side? The quantity will decrease, but price, there will be an opportunity to increase or decrease or remain unchanged. When both the demand and supply shift to right side, then quantity will increase, no doubt, but price may increase or may decrease or may remain unchanged. When demand shift to left side, shift in demand left means decrease in demand. So supply will shift to right side. So supply will increase. Definitely what happens if demand is less than the supply? So price will start decreasing. But quantity demand, it may increase, it may decrease or remain unchanged. What happens if demand shift to right side and supply shift to left side? The quantity may increase or may decrease or remain unchanged, but price increases. Next, let us discuss money overcomes the drawback of barter system. How money will overcome the drawbacks of barter system. So let us discuss the functions of money, and that can be written in the short form M square, S square and G. Medium of exchange, measure of value, store of value, standard of deferred payments and transfer of value. These are the main functions of money, and because of these functions we are able to remove the drawbacks of barter system by introducing money as a medium of exchange. As a medium of exchange, money has removed the major difficulty of lack of double coincidence of want in the barter system. As money comes in between commodities, it separates sale and purchase of goods and services. Measure of value. Under barter system, different goods were of different values and there was no common measure of value. As the value of goods and services are expressed in terms of price, that is money, it is able to remove the measure of value difficulty which was faced during the barter. Next one is store of value. Under barter system, it was difficult to store the goods for future use. Most of goods are perishable and required a huge space and transportation cost. Money can easily be stored for future users. It acts as a convenient means of storing, carrying of wealth. Standard of deferred payments. The barter system lacks suitable standard of deferred payments, which creates a difficulty in credit transactions. Borrowing may not able to arrange good for exactly same quality at the time of repayment.
It has simplified borrowing and lending operation and encouraged capital formation. Explain the functions of RBI. The RBI was established on the 1st April 1935 as per the Act of 1934. First function is monopoly of note issues. Central bank has sole authority to issue the currency in the country. It issues notes of all denominations: 10 rupees, rupees 20, 50, 100, 200, 500 and 2000 notes. It follows minimum reserve system. Bankers to the government. The RBI acts as a banker, agent, financial advisor to central and state government. It maintains the current account for keeping government's cash balances. It accepts receipts and payment for the government. It also gives loans and advances to government. It gives a financial advice to government from time to time. Next one is Bankers Bank. The activities of all commercial banks are controlled and managed by RBI. RBI acts as a custodian of cash reserves of commercial bank. It acts as a lender of last resort and it acts as a clearing house between commercial banks. Controller of credit. The central bank controls supply of money and credit in the economy. It uses quantitative and qualitative methods to control credit creation of commercial banks. Briefly explain consumption function. The consumption function describes the relationship between consumption and income. Consumption function or consumption changes at a constant rate as income changes. I repeat once again, consumption changes at a constant rate as income changes. If income is zero, some consumption still takes place. It is called autonomous consumption. Consumption can be written in the equation form C equals C bar plus CY. Here C is a consumption and it consists of two components. One is autonomous consumption denoted by C bar. Another one is induced consumption denoted by CY. Autonomous consumption is independent of income. Induced consumption is dependent on income. When income increases to 1 rupee or rupee 1, induced consumption rises by MPC. That means induced consumption depends on marginal propensity to consume. It can be explained as MPC equals change in consumption due to change in income. You can see diagrammatically on x-axis income is measured, on y-axis consumption is measured. This horizontal line you can see here C bar. So that is the autonomous consumption. Whatever may be your level of income, but consumption remains constant. But you can see here this one is induced plus autonomous consumption. Because of induced consumption, the slope of consumption function slopes upward. That means as income increases, consumption also increases. So consumption function is a graphical representation which shows the relationship between income and consumption. As income increases, consumption also increases at a constant rate. It has a positive slope. The slope of consumption function is denoted by tan alpha. Briefly explain investment function. Investment function, okay. Investment is defined as addition to the stock of physical capital and changes in the inventory of producer. Investment decisions by producer depends on the market rate of interest. However, as we assumed that firm plan to invest same amount every year, so here investment is taken as autonomous investment. That means investment remains constant. You can see in the diagram, the investment remains constant whatever may be the level of income, but investment remains constant. So here it is a graphical representation of investment function. In this diagram, horizontal line at the height equal to I bar above the x-axis, horizontal axis, is an autonomous investment, will be same no matter whatever the level of income. Now let us discuss balance of trade, which is important for 4 marks. Balance of trade is a component of balance of payment on current account. So balance of trade is a part of current account under balance of payment. It is the difference between value of export and import of goods of a country in a given period of time. I repeat once again, it is the difference between value of export and import of goods of a country in a given period of time. It is also known as trade balance. Export of goods is entered as a credit item under balance of trade, whereas import of goods are entered as a debit item in the balance of trade, as balance of trade and balance of payment are cash account. They are all cash account. Now the balance of trade are of 3 types: balanced balance of trade, surplus balance of trade, and deficit balance of trade. Balanced balance of trade, it is said to be balanced balance of trade when the value of export of goods are equal to value of import of goods of a country. When it will be a surplus, it is said to be surplus balance of trade when the value of export of goods are greater than the value of import of goods of a country. Next one is deficit balance of trade. It is said to be deficit balance of trade when the value of export of goods are lesser than the value of import of goods of a country. The components of a government budget is also important for 4 marks. So the government budget is divided into 2 divisions: revenue budget and capital budget. Revenue budget has 2 components: revenue receipts and revenue expenditure. Same way you can see capital budget has capital receipts and capital expenditure. Revenue receipts are of 2 types: tax revenue and non-tax revenue. Revenue expenditure has 2 types: planned revenue expenditure and non-planned revenue expenditure. You can see capital budget has 2 types. One is capital receipts, another one is capital expenditure. You can see capital expenditure further divided in a similar way how it is divided and revenue expenditure, that is planned capital expenditure and non-planned capital expenditure. Next one is they may ask you to explain or draw the flow chart for current account in the balance of payments. The current account has 3 components: trade in goods, trade in service, transfer payments. Trade in goods are of 2 types: export of goods and import of goods. And trade in service are of 2 types: net factor income and net non-factor income. Net factor income, again it is further divided into net income from compensation of employees and net investment income. Here you can make it as income. Dear students, make it as income. Then net non-factor income, you can give examples: shipping, banking, insurance, tourism, software service, etc. Then come to transfer payments. It consists of gifts, remittance and grants. Or for 4 marks, they may ask you to draw the chart of capital account under balance of payments.
Okay, here capital account has three components: investment, external borrowing, external assistance. Investment are of two types. One is direct investment and the one is a portfolio investment. Direct investment, you can see the example: foreign direct investment, equity capital, reinvested earnings and other direct capital flows. Portfolio investment, good examples are foreign institutional investment, offshore funds. External borrowing can be of external commercial borrowings and short-term debt. External assistance, you can see the good examples are government aid, intergovernment, multilateral and bilateral loans. On final goods. Final goods is one which will not pass through any more stages of production. For example, tea leaves purchased by consumer are not consumed in that form. They are used to make a tea. Cooking at home is not an economic activity. So final goods, sometimes it should go or pass through further more stages of production. Good example is tea leaves. But if it is prepared by housewife or consumer for his own consumption purpose at home, he will transfer tea leaves into tea. But it is not an economic activity unless it is sold in the market. If the same cooking was done in a restaurant would be sold to consumers, then the same to be a final good and same to be final goods and would be counted as input. Thus, it is not the nature of good, but it is the economic nature of its use that good becomes a final good. See here, then the same tea leaves will be taken as final good, and in some cases tea leaves are taken as input. So it is not the nature of good which decides whether it is final good or not, but it is the economic nature of its use which decides whether it is economic good or sorry, final good or not. Explain the circular flow of income of an economy. It refers to total value of final goods and services going around in a circular way among different sectors. What are the assumptions? Two sector economy, no savings, no inventory, household supplies factors of production and firms supply goods and services. So you need to draw the flow chart as we have taken only household and firm two sector economy. Now household sector will supply factors of production to firm to produce goods and services. After receiving the service of factors of production, firm will make a payment to factors in the form of rent, wages, interest and profit. The household sector, after receiving their income or payments, they are going to spend to buy goods and services from firm. So after receiving a firm receipts, it is going to supply goods and services to household sector. Here you can see the aggregate consumption by the household sector is equal to the aggregate expenditure on goods and services produced by firms in the economy. So how much they spend is exactly equal to the value of these goods and services. Next, you can see here household sector supplies the factors of production in the form of land, labor, capital and organization, and firms make a payment to household in the form of rent, wages, interest and profit. Household sector, that is households with their income buys goods and services from the firm, and the entire income of the economy comes back to producer in the form of sales revenue. Outer circle represents a real flow and inner circle shows the money flow. So inner circle shows money flow, and outer circle shows real flow. Next, you can calculate national income by considering this circular flow of income. If we calculate the factor payments, which we call it as income method, at point B, if a expenditure made by household sector, if we consider, then calculation of national income by expenditure method. Then if we consider product method, if we consider the value of goods and services that form supply to household sector, you will get on GDP by product method. Now let us discuss planned accumulation and decumulation of inventory, which is important for 4 marks. What do you mean by planned accumulation? If a firm plans to increase inventory, then it is called planned accumulation of inventory. Suppose a firm wants to raise inventories from 100 shirts to 200 shirts during the year, expecting to supply 1000 shirts during the year. The firm produces 1000 shirts to supply in the market, and it wants to increase inventory from 100 shirts to 200, so it is going to produce extra 100. So total production of that year is 1100 shirts. If the sales of firms actually 1000 shirts, then 100 shirts will be added to new stock of inventory. That is 200 shirts, which was planned earlier, is called planned accumulation. Planned decumulation. It means if a firm plans to reduce the stock of inventory, it is called planned decumulation. Suppose firm want to reduce inventories from 100 to 25 shirts during the year, expecting demand for 1000 shirts. Then firm produces 925 shirts in order to market. That means 75 it will withdraw from the inventories. If the firm is able to sell 1000 shirts as expected earlier, then the firm will be left with only 25 shirts. This is called planned decumulation of inventory. Let us discuss unplanned accumulation and decumulation of inventory with an example which is important for again 4 marks. An unexpected fall in sales, there will be unplanned accumulation of inventory. If sales decreases, then we need to add the left out unsold shirts into the inventory. So that we call it as unplanned because it was not expected. Example, a firm produces shirts. It starts the year with an inventory 100 shirts during the coming year. It expects to sell 1000 shirts. Hence, it produces 1000 shirts expecting to keep an inventory 100 at the end of the year. In the stock, how much? 100 shirts were there, and it wanted to keep only 100 shirts in the inventory, and it wanted to sell 1000 shirts. So it is going to produce only 1000 shirts as inventory is maintained with 100 shirts. However, during the year, sales of the shirts turned out to be unexpectedly low. The firm is able to sell only 600 shirts. This means that firm is left with 400 unsold shirts. Then it will be sent to inventory at the end of the year. 400 100 which was already maintained, totally it will end with 500 shirts. An unexpected rise in the inventory by 100 shirts will be an example of unplanned accumulation of inventory. Then what do you mean by unplanned decumulation of inventory, where there is unexpected rise in the sales there will be a unplanned accumulation of inventory. So unexpected rise in the sales will lead to unplanned accumulation of inventory. For example, it expects to sell 1000 shirts. Hence, it produces 1000 shirts. If the sales had been 1050, then not only the production of 1000 shirts will be sold, the firm will have to sell 50 shirts out of the inventory. This unexpected reduction in the inventory is an example of unexpected accumulation of inventories. Dear students, now let us discuss the 6 marks most frequently asked questions. Explain the law of diminishing marginal utility with the help of a table and diagram. First, let us write our introduction. The law of diminishing marginal utility is one of the most important law in economics or under cardinal utility analysis. It was given by H.H. Gossin, was the first to explain this law. Later it was developed and popularized by Alfred Marshall. This LDMU is also known as Gossin's first law. You can write the meaning of LDMU. It says that as consumer consumes more of commodity, utility of additional units consumed diminishes or diminished. Let us understand this law with the help of a table and diagram. Before that, we should make a few assumptions. A consumer must be a rational and reasonable size he has to consider to consume the commodity. Income of the consumer should remain constant, identical units, taste and preference of the consumer should remain constant, and there is no time cap. Now, in the table you have to take number of mangoes consumed, total utility and marginal utility. You can see here number of mangoes we have taken 1 to 6. Total utility is taken here and marginal utility. First, always you write marginal utility. First you take one number negative, then 0. Then multiples you can take like a 2, 4, 6 and at last number you take it as 12, double of 6. Then you make a zigzag addition. First one 12 as it is we will write 12 plus 6 18, 18 plus 4 22, 22 plus 2 24, 24 plus 0 and minus 2 you will get a 22. So like this you can make a table. In the table you can observe as consumption of mangoes increases, marginal utility will keep on decreases. So you can observe even total utility as consumption of mangoes increases, total utility also increases. When marginal utility becomes 0, total utility will be maximum. When marginal utility becomes negative, total utility becomes or starts falling. The same thing is represented with the help of a diagram. On x-axis mangoes are measured, on y-axis total utility and marginal utility are measured. When you represent graphically, you can see here the marginal utility is keep on decreasing as consumption of mangoes increases. But you can observe total utility increases, later becomes constant and starts decreasing. In the diagram you can assume or you can see here at 5th unit of output marginal utility will be 0 but total utility will be at its maximum. When marginal utility becomes minus 2, total utility starts decreasing. Dear students, now one more 6 marks frequently asked question. Explain the features of indifference curves. What do you mean by indifference curve? Indifference curve is a graphical presentation of all possible combination of two goods which gives the same level of satisfaction. So first one is indifference curve slopes downwards from left to right. You can see always we read the diagram like this from left side to right side. You can observe IC curve, indifference curve, slopes downwards from left to right. And indifference curve slopes from left to right. An increase in one commodity must be compensated by a fall in the quantity of another commodity. So if you want to have more of bananas, you have to decrease mangoes when you are going to increase number of bananas. Then only IC curve will be convex to the origin and it will flow from left to right downwards. The second point, higher the indifference curve gives a higher level of satisfaction. You can see here there are three indifference curve, IC1, IC2, IC3. So higher the indifference curve, higher will be the level of satisfaction. Lower the indifference curve, lower will be the level of satisfaction. See, if you consider here banana 1, 2, 3. So here combination 10 units of mangoes. So at a C unit of or combination, you will have 10 units of mango and 3 units of banana. Definitely it will give more level of satisfaction than having 10 units of mangoes and 2 units of banana. So this is what they are saying, an indifference curve at the extreme right side. This is right side. At extreme right side, that means IC3 represents higher level of satisfaction. The curve at the extreme left side means towards origin or towards left side, you can see IC curve represents lowest amount of satisfaction. The third one is two indifference curves never intersect each other. So two indifference curves never intersect each other because they represent different level of satisfaction. See, IC1 gives a different level of satisfaction and IC2 give another level of satisfaction. That means different level of satisfaction. So you cannot merge or intersect both IC1 and IC2 as they represent different level of satisfaction. We know that A and B lies on same indifference curve. So that is IC1, it gives the same level of satisfaction, and A and C lies on IC2 which gives the same level of satisfaction. But combination C and combination B lies on different indifference curves, so they give a different level of satisfaction. So generally we cannot accept this one. So because of that reason we say that two indifference curves never intersect each other. One more most important 6-mark question is classification of receipts. Dear students, here you can see receipts are of two types. One is revenue receipts, another one is capital receipts. What is revenue receipts? Revenue receipts are those money receipts of the government which do not create any liability or reduction in the assets of the government. Therefore, they are termed as non-redeemable. Revenue receipts are of two types. One is tax revenue, another one is non-tax revenue. What do you mean by tax revenue? Is a compulsory payment made by a person to government without any expectation. So here tax revenue is divided into two divisions. One is direct tax, another one is indirect tax. Direct tax is a tax where impact and incidence is on on same person. Example, income tax and corporate tax. Indirect tax is a tax where impact and incidence is on different persons. Example, custom duties, excise tax and service tax, and even you can consider GST. Dear students, next one is non-tax revenue. Revenue is divided into two divisions: revenue receipts, tax revenue and non-tax revenue. Now we are talking about a non-tax revenue. Non-tax revenue includes dividends, profits on investment by government, fees, fine, penalties and cash grants and aid to government by foreign countries.
Then what do you mean by capital receipts? It refers to those receipts of the government which creates a liability or reduced financial assets. So these receipts can be debt creating or non-debt creating. Capital borrowings are of two types. Internal borrowing, it includes a borrowing by government from RBI directly and indirectly from commercial banks and borrowing from public through open market operation. External borrowing, it includes borrowing by the government from IMF, World Bank and even from foreign governments, etc. Now let us discuss classification of expenditure, which is important for 6 marks and expected question. Expenditure is broadly classified into two categories, revenue expenditure and capital expenditure. What do you mean by revenue expenditure? It is an expenditure incurred for the purpose other than the creation of physical or financial assets of the government. It has two types. One is planned revenue expenditure, another one is non-planned revenue expenditure. Planned expenditure, it includes the expenditure incurred on central 5-year plans and central assistance to state and union territory plans. And non-planned expenditure, non-planned revenue expenditure, if you consider, it is an important component. It covers general, economic, social service of the government. The main items are interest payment, defense, subsidies, salary and pension. Now let us discuss this capital expenditure, second part of classification of expenditure. The expenditure of the government which results in creation of physical or financial assets or reduction in the financial liabilities. It includes expenditure on acquisition of land, building, machinery, investment in shares, etc. It is also classified into planned capital expenditure and non-planned capital expenditure. What is planned capital expenditure means? It includes the central government plans, central assistance to state and union territories. And second one is non-planned capital expenditure. It includes various general social economic services provided by government. Example, education, health, expenditure on agriculture, power, development, etc. Now let us discuss balance of payments, which is important for 6 marks. It is a systematic record of all economic transactions of a country with the rest of the world. So it is a systematic record of all economic transactions of a country with the rest of the world. It has two accounts. One is current account, another one is a capital account. Current account records trade in goods, service and transfer payments. Trade in goods we can deal with or we can enter export and import of commodities, which also called as trade balance. Trade in service, it records service rendered and received like rent, wages, profit, net sale of software services, etc. Transfer of payment, it is a unilateral payment which includes gifts, remittance and grants, etc. Current account may be a surplus, balanced or deficit. Come to capital account. Capital account includes capital transactions such as borrowing, lending of capital, sale and purchase of assets between the countries. It consists of investments, external borrowing, external assistance. Even capital account can be a surplus, deficit and balanced. Next one is official reserve account. In the balance of payment, we come across the official reserve account. Any imbalances in the balance of payment is adjusted by buying and selling of gold or foreign exchange reserves by RBI. The types of balance of payments you can see here: balanced balance of payment, surplus balance of payment and deficit balance of payment. When the countries
value of export of goods and services are equal to import of goods and services, then the balance of payment is said to be balanced. Surplus balance of payment, when countries' value of export of goods and services are more than the value of goods and services imported. The balance of payment is said to be deficit when the value of export of goods and services are lesser than the value of import of goods and services. Now one more question, that is a story of Goldsmith Lala and the process of deposit loan created by commercial banks. The process of deposit loan created by commercial banks is explained below. Once in a village there was a goldsmith called Lala. In the village people used gold as a medium of exchange. People in that village keep the gold with Lala and in return Lala issued paper receipts. Gradually paper receipts began to circulate as money. So paper receipts started acting as a medium of exchange. Now let us suppose Lala had 100 kgs of gold deposits by the people and Lala issues a receipts equivalent to 100 kgs of gold. At this time, Ramu come to Lala and asked for a loan of 25 kgs of gold. The 100 kgs of gold with Lala already has reserves. However, Lala would decide that everyone will not come to withdraw their gold deposits at a time. So, he gives loan to Ramu and charges him a rate of interest he will charge for that loan. If Lala gives loan of 25 kgs of gold, Ramu could also pay Ali with the gold. Ali could keep gold with Lala. Now Ali will come and keep gold with Lala in turn for a paper receipts. In effect, paper receipts acting as a money would have risen by 125 kgs now. Already 100 kg worth of gold receipts was issued by Lala. Now 25 kg which was given as a loan to Ramu. Now Ramu will pay 25 kg to Ali. Ali will keep again this 25 kg gold with Lala. So 100 plus 25 it becomes a 125 kgs of gold receipts which is circulated in the village. It seems that Lala created money out of thin air. The modern banking system works precisely the way Lala behaves in this example. This is how modern banks creates credit. One more important 6-mark question, macroeconomic identities. Some important macroeconomic identities are GDP, gross domestic product, the total value of final goods and services produced within the domestic economy during a year. So what is the formula for GDP? Market price is equal to C plus I plus G, X minus M. Gross domestic product at factor cost is equal to GDP market price minus net indirect tax. Next one is net domestic product, that is NDP, net domestic product. The aggregate production of final goods and services taking place within the domestic economy during a year. If we add or if we deduct depreciation from GDP, we get NDP. NDP market price equals GDP market price minus depreciation. So gross is converted into net. To convert gross into net, you should deduct a depreciation. So here domestic, so within the economy, whatever is produced, those goods value we are going to consider. The third one is GNP, gross national product. The total value of final goods and services in an economy, regardless whether that production has taken place in domestic territories or abroad.
As we are considering national, you should consider domestic territories and abroad. But it includes depreciation charges. So GNP market price equals GDP market price plus net factor income from abroad. Next one, NNP, net national product, the aggregate production of final goods and services in an economy, regardless of whether that production has taken place in the domestic territories or abroad. So NNP market price equals NDP market price plus net factor income from abroad. So domestic is converted into national. To convert domestic into national, you should add net factor income from abroad. Next one is personal income. PI, personal income. The part of national income distributed to household called personal income. Personal income equals national income minus undistributed profit minus net interest payments made by households minus corporate tax plus transfer payments. The sixth one is PDI, personal disposable income. It is a part of aggregate income which belongs to the households. So PDI equals personal income minus personal tax payments minus non-tax payments. Dear students, till now whatever we have discussed, those questions are most frequently asked questions. There are so many other questions which are also important. Please do refer. Dear students, if you like, please like, share and subscribe to my channel. Thank you so much.